Bitcoin's been on quite a ride lately, hasn't it? That push past $111,000 definitely got everyone talking. And if you're like me, you're probably wondering, okay, what comes next? We got some interesting analysis here, looking specifically at Bitcoin's prospects for the third quarter, especially coming off that fresh all-time high.
Exactly. What we're aiming to do in this deep dive is to, well, really dig into the likelihood of Bitcoin seeing that aggressive leg higher in Q3 that some analysts are mentioning. We'll be weighing, historical performance against the current market landscape and expert opinions to give you a clearer sense of what might drive its price in the months ahead.
Okay, so let's get right to it. That peak, $111,970 on May 22nd, it was a big moment, but the analysts over at Bitfinex are saying the next few weeks are going to be really key in figuring out if that was just like a flash in the pan or maybe the start of a sustained climb heading into Q3.
Yeah, and what's particularly interesting is their take on what a healthy move upward might actually look like. They suggest that some sideways trading, consolidation, or even a slight pullback could actually be a positive thing.
Positive how?
Well, it could allow the market to build a more solid foundation, for future gains, rather than just rocketing up without any real support underneath it.
That kind of reminds me of what happened earlier this year. We saw that run up to, around $73,000 in March?
Mm-hmm.
And then it just sort of leveled off for quite a while, didn't it? It wasn't until around November, I think, that we saw a significant movement again. So these periods of consolidation after big jumps, they seem to be a recurring pattern.
Precisely. And if we think about why that might be, it speaks to the inherent volatility we see in the crypto space, right? These periods of sideways action, while maybe not the most exciting for people looking for immediate returns, can be really crucial for the longer-term stability and growth of an asset like Bitcoin.
Right. Okay. Now, this is where things get really interesting, I think. When you look back at Bitcoin's historical performance, specifically in the third quarter, the data from CoinGlass paints a bit of a different picture.
Yeah.
Apparently, Q3 has actually been its weakest quarter on average since 2013.
Yeah, weakest, with an average return of only about 6%.
Only 6%. Wow.
That's a really significant data point to consider, especially with all the recent optimism. And just to put that 6% average Q3 return in perspective, Q2 has historically delivered much stronger gains, averaging over 27%.
Okay.
And Q4 tends to be the best performing quarter overall. So the question becomes, will this historical trend hold true this year, even with the recent high, or is something different this time?
It definitely makes you wonder if we're heading into a potentially slower period. The article also mentions that Bitcoin has recently entered what they're calling a short-term range-bound phase. And we've seen a pretty significant amount of selling from short-term holders. Those who've held their Bitcoin for less than 155 days. Why is that 155-day mark significant, by the way? Is there a reason for that specific number?
Yeah, well, that 155-day threshold is often used in market analysis. It's kind of a dividing line to differentiate between, let's say, short-term speculative activity and potentially longer-term investment strategies. Holders below that mark are often seen as more reactive to short-term price swings and profit-taking opportunities.
Okay, that makes sense. And the article says these short-term holders have realized profits of over $11.4 billion in just the past month.
Mm-hmm.
That's a huge number. Does that kind of profit-taking typically signal maybe a lack of confidence in further near-term gains?
It certainly introduces near-term supply into the market, as those profits are realized, selling pressure. However, it's also, a pretty natural part of the market cycle after a big price increase. What's important to watch is whether the underlying demand from longer-term investors, new entrants, is strong enough to absorb this selling pressure.
Right.
And the article does suggest that structural demand is, in fact, expected to be there.
And according to the BitBot data mentioned, these short-term sellers were sitting on some pretty decent profits, around 13.7% on average, I think it said.
Yeah, about that.
So you can kind of see why they might decide to, take some chips off the table there.
Exactly. It highlights that push and pull, right, between the short-term profit motives and the longer-term conviction in Bitcoin's potential. So while this selling creates immediate supply, it doesn't necessarily derail a sustained uptrend if the broader market sentiment stays positive.
Which brings us to some interesting indicators of potentially a maturing market. The Bitfinex analysts point to the strong bid strength we're seeing in Bitcoin ETFs, the relatively low volatility recently, and the existence of a spot premium. Signs of this maturation. What exactly does a spot premium tell us in this context?
Okay, so a spot premium in Bitcoin trading generally means that the price of Bitcoin in the spot market, where it's bought and sold for immediate delivery, is trading higher than Bitcoin futures contracts.
Ah, okay.
And this can suggest strong current demand for the actual asset because buyers are willing to pay that bit extra for immediate access right now.
Interesting. So these factors, the ETF demand, lower volatility, that spot premium, are leading the analysts to believe the market is becoming poised for eventual continuation once macro clarity improves. When they talk about macro clarity, what specific things are they likely keeping an eye on? What does that mean?
Well, the primary focus there is the broader economic environment, and particularly the actions of the U.S. Federal Reserve. The article specifically highlights the upcoming Fed interest rate decision on June 18th. That's seen as a key event that crypto investors will be watching very, very closely.
Right. Yeah, because interest rate policies can have a big impact on how investors view different asset classes, including things like Bitcoin.
For sure.
Higher rates can sometimes make riskier assets less appealing and, well, vice versa. And as the article reminds us, the Fed held rates steady back in May. So, yeah, all eyes are on what they decide in June.
Precisely. Any indications about future interest rate movements or even just the Fed's overall outlook on the economy can send ripples through the crypto market. Clarity on these big macroeconomic factors can provide more certainty for investors and maybe potentially encourage further investment into risk assets like Bitcoin.
It's also worth maybe looking back at some of the predictions we heard earlier in the year. The article mentions Swan Bitcoin CEO Corey Clipston saying back in March that he thought there was maybe a 50% chance of Bitcoin hitting new highs before June.
I remember that.
And Jamie Coutts from Real Vision even suggested we might see those new all-time highs before the end of Q2. It's interesting to see how those predictions are sort of stacking up against the current situation.
Yeah, those earlier predictions really underscore the inherent uncertainty and, let's be honest, often speculative nature of market forecasting, especially in such a dynamic asset class like Bitcoin. While some analysts were clearly optimistic, the market's actual path can be influenced by just a multitude of unforeseen factors.
Definitely.
It serves as a good reminder, I think, that even well-informed predictions can have, varying degrees of accuracy.
Absolutely. And it's so important for you listening to remember that none of what we're discussing here is financial advice. Not at all. The article itself includes a clear disclaimer about the risks involved in investing. Always, always make sure you do your own thorough research before making any investment decisions.
That's the crucial takeaway, really. Understanding the information, like what we've discussed today, and aligning any decisions with your own risk tolerance and your own research is paramount, especially in the crypto market.
So just to kind of wrap things up, Bitcoin hit a new all-time high recently, generated a lot of excitement, obviously. However, the potential for that aggressive leg higher in Q3 is still, well, uncertain. Historically, Q3 has been a weaker period for Bitcoin. We've seen significant profit-taking from short-term holders, creating some near-term supply pressure.
But on the other hand...
Yeah, on the other hand, we're also seeing these signs of market maturation, like strong ETF inflows, which suggests ongoing demand.
Right. And the upcoming U.S. Federal Reserve decision in June will be a key event to watch for that broader economic clarity we talked about.
Exactly. By examining all these different pieces of the puzzle, the historical trends, analyst insights, current market dynamics, we can hopefully build a more informed perspective on what the future might hold for Bitcoin in the coming months, based on this particular analysis anyway.
That's the goal.
Now, for one final thought to really get you thinking, considering Bitcoin's historical tendency for a weaker Q3 and balancing that with the current market forces like strong institutional demand through ETFs and the significant profit-taking we've observed, what do you believe will ultimately be the most influential factor in determining Bitcoin's price trajectory in the third quarter? Are we likely to see history repeat itself, or are the current market conditions maybe fundamentally shifting the landscape this time around? Something to ponder.